مساء الخير جميعا. Good evening everyone. Thank you for attending our second session, the next level of data analytics. It is a pleasure to have you today, and I would like to thank the IAA chapter in Jordan, ISACA Amman, and the IMA chapter in Jordan as well for their efforts in making this event happen. Today, our presenters will be Uthman Barakat. Uthman is a supervisor with our firm, and he's a data analytics expert. He is a certified IDEA data analytics trainer as well. Hisham is also a senior with our firm and a certified IDEA data analytics expert and trainer as well. So let me just remind you of what happened last session. Last session was an introduction to data analytics. And we tried to include some practical examples, but we couldn't include as many as we wanted. In this session, inshallah, we will have more examples. However, we'll be using one data analytics tool, the one that we are good at and we know very well, which is IDEA data analytics. It doesn't mean that other data tools, data analytics tools are not good or they cannot do the same. In our case, it is our preference. We use it a lot and it's user-friendly, and that's why we decided to use it across the webinar. So the first part that will be covered by Uthman will talk about data visualization. And then Uthman will start talking about advanced data analytics methods. And under that, there will be a number of topics. And then he will allude to sampling using data analytics as well. And you will see how easy it is to sample using data analytics. And then the second parts will be completed by Hisham Al-Yafi, starting from part 4. The data analytics and the path to automation, and then advanced data analytics and visualization, robotic process automation, artificial intelligence and machine learning, and finally the benefits from automation. So I think with that we will start, and I will leave it to my colleague Uthman to start with the presentation. Uthman, go ahead, please.
Thank you, Mr. Nasser, for the introduction. Hello, everyone, and let's get started with data visualization. Data visualization can be briefly defined as a technique that allows the consolidation of data and viewing data in an illustrative manner. We, as auditors or accountants, understand tables, and we tend to use them frequently. But we report to various stakeholders, and we cannot expect that it is as easy for our stakeholders to understand tables and numbers in the same manner we do. That is one of the points we should consider. To better explain my second point, let me ask you this question. Have you ever seen an advertisement that contains tables and spreadsheets? Let me phrase it differently for you. Will an advertisement containing spreadsheets stuffed with numbers get you to crave a particular product? Will you feel the need to purchase this product? The answer is probably no. So if companies do not advertise their products by using tables stuffed with numbers, then why do we as auditors or accountants promote our reports in the same manner? In fact, if we know graphical illustrations are more attractive and easier to understand, then we should start using them more often in our reports. Now, this gets me to the third part of my discussion with you today, which is a poll question. And I'd like to ask you, at which stage of the audit engagement do you think data visualization is most important? Is it at the planning risk assessment stage? Is it at the planning defining the engagement scope stage? Or is it at communicating results and reporting stage?
You can select more than one answer.
You can, of course, select more than one answer. Right. So let me share with the results for you. 55% said that it's at the planning risk assessment stage. 47% said it's at the planning defining the engagement scope stage, and 64% said that it's at the reporting stage. Now, most of you would have answered all stages, which is the correct answer. Data visualization should be used at all stages. And the reason, which is why we brought this question up, is when most auditors think about using data visualization, the obvious place they think of is at the reporting stage to present findings to key stakeholders who might not always understand how rows and columns indicate critical issues. However, data visualization is equally effective at the beginning when we scope the audit or when we conduct the risk assessment. When we're working with limited amount of time and resources, we will need to adjust our scope accordingly, which is where data visualization can save hours of effort and by providing us with the big picture and allowing us to allocate our resources accordingly. This is something that can be difficult if we're looking at rows and columns. So let me show you how can data visualization be used in risk assessment. Risk assessment, as you know, are used to prioritize audits when allocating audit resources. Data visualization can be infused into the systematic process of evaluating risks associated with an area or a set of activity. Since we cannot audit everything, we need to look at the likelihood and impact to determine the level of risks and allocate our resources accordingly. Let me share with you this example and this poll question. Imagine you have 3 potential locations for an inventory audit, and audit resources only allow for an audit of 1 location. Which location will you select based on the below charts? Now, the charts outline the inventory volume by product under each location, and the second chart outlines the sales summary by product type. The third chart outlines physical adjustment by product type per location. Which location would you select? Location A, B, or C? Now, the majority of you answered that it's location B, and location C was very near to the percentage who answered location B. The correct result is location C. And the reason for that is because if we look at the inventory volume by product type, you'll note that inventory volumes are higher in location C than any other location. Moreover, and this is the key aspect for the impact, location C contains most of product 3, or it contains the highest quantities of product 3. And if we look at the sales summary by product type, you will note that most our revenues or the highest revenues are generated by product 3. And that's why in terms of impact, location C has a higher impact level. If we look at physical adjustments by product type, you will note that most adjustments were made in location C, indicating that there might be something suspicious in there. So accordingly, this is how you can use data visualization to prioritize audits and in your risk assessments. Now we get to data visualization and determining the engagement scope. So how does data visualization help us in determining our engagement scope? Data visualization makes it easier for us to identify transactions not following specific business rules, or to identify balances outside the norm, or areas of interest, and it can help us identify trends within large data. Now, I'm sharing with you an example of a dashboard that I created by using Caseware IDEA. I will show you it once we get to the system demo. But look at how easy is it for us to identify certain trends or high value transactions. For example, if we look at the second chart, which is total sales by invoice date, we can know that in January, most or the highest sum of total transactions were recorded in comparison with the other months. Now, we mentioned some of the benefits of using data visualization in reporting, but let's summarize them quickly for you. Basically, using data visualization in reporting allows you to explain complex data for stakeholders. It helps stakeholders better understand data in a shorter amount of time. It enhances communication during kickoff and audit commencement meetings because it will allow you to understand the client data and the transactions processed by the client. You can then focus on risky areas or risky transactions or high value transactions. And it informs stakeholders of issues in a more rapid and clearer way. It demonstrates areas of risk and improvements in a way that can be easily understood. Now, there are 4 key points that we should consider in using data visualization in reporting. The first one is that we should make the information meaningful. And in order to do that, we have to have a specific purpose in mind. So we have to have an objective. What is it that you're trying to report? What do you want, your audience to understand? And then you should definitely cater for the form, make it easy to understand, make it easy for the audience to know where the issues are, avoid overcrowded charts, try to highlight critical issues by using colors. And as with any data analytics process, you should ensure the integrity and accuracy of your data and be confident in what you are presenting. Now, let us, I'll share with you the dashboard I mentioned earlier in the presentation. Now, the dashboard was highlighting data that relates to a sales transaction. Now, the transaction shows invoice number, invoice date, sales representative, customer ID, product code, quantity, unit price, amount, sales tax, and total sales. If I click on visualize, then IDEA will show me a list of all the dashboard that I saved. Now, this is one of the aspects you should cater for when visualizing data. You should design dashboards that would allow you to continuously use them without having the need to redesign the dashboard whenever you import new data. So now in my database, whenever I import a new sales transaction that contains the same column, IDEA will run the same dashboard for me that I already tailored and saved. Now, by clicking on the dashboard, you will see the charts that I tailored and the information that I summarized. Now, each of the charts that I have in here can be fully customized. For example, I can change the chart type. I can change what the data is grouped by, and I can change the statistics that the data presents. Now, let us get into the details. The first chart is count of records by total sales. You can see that IDEA divided, the entire database into subgroups based on the total sales. So we have from $0 to $500 as a group, from $500 to $1,000 as a group. Now you can see that the count of records or count of transactions under each group. You can see that high value transactions are highlighted for you in red. And now these are the transactions that are above $9,500. If you'd like to generate or know the details of these transactions, you can easily click on them and you will have a list of all the transactions relating to these high value transactions. Now, this is another important feature that you should have in your dashboard, which is the ability to drill down and identify transactions that you want to investigate further. The second chart is the chart I explained earlier in the presentation. This shows the sum of total sales by invoice date. Again, the highest month in which we recorded most of our revenue was January in comparison with the rest of the months. Now, the second transaction or the third chart within my dashboard is the total sales and count of records by product type. Now you can see that product 5 had the most transactions, so it had around 913 transactions. However, product 6 had the most of the value in terms of total sales. So in terms of value, product 6 was our highest revenue generating product. However, in terms of count, product 5 was the highest. Now, again, product 6 contains 5 records and they account for 16 million nearly. In an audit scenario, I might want to identify these transactions and include them in my sample. The final chart shows you the sum of total sales by sales representatives. And I can immediately note that 2 of my sales representatives are accountable for most of the revenues we generate. Now, in addition to these charts, there are some specific red flags or statistics that I asked my tool to outline for me. For example, if you look in here, what the tool is telling me is that I have 3 zero items in my total sales. I have 1 negative record in my total sales. I have 4 duplicate invoices. And if I want to investigate these 4 duplicate invoices, I can easily click on them and generate the details and then investigate them. Now, any of these statistics is also customizable. Now, going back to our presentation, we get to the advanced statistical methods. And the following are 3 statistical methods that you can conduct using any data analytics tool. These are correlation analysis, trend analysis, and time series. Correlation analysis evaluates the relationship between 2 different variables and determines if they are in any way correlated to each other. Correlation can be either positive, 2 values go up together, negative, when one value goes up, the other goes down, or neutral, there is no relationship between the values or the fields. Trend analysis graphs a data set and establishes a trend line based on the statistical model and can predict future values based on these statistical trends. Time series is a form of trend analysis that is used when data is seasonal in nature. It's used when data is in a series of a particular time periods or intervals. Now, this brings us to our next poll question, which is to identify the relationship between 2 different variables. Which analysis technique would you select? So most of you got this correct. It's correlation analysis. Now, moving on, let us get to the system demo and show you how these analyses can be conducted using a data analytical tool. Now, imagine your engagement client is a restaurant that has 3 different locations. And the client asked you to identify the seasonality in total sales based on each location and within the different months of the year. Now you were provided with the data for 2 consecutive years, and you have the monthly transactions and sum of after-tax amount. Now, what you will do in that case is you will run a time series analysis because you're identifying the seasonality in total sales. Now, the field that you run the analysis for is the after-tax sum amount, and your audit unit field would be the location or ID. You would, of course, include all 3 locations. The seasonal length is obviously 12 months, and you can just click on OK, and the tool will generate the analysis for you. Now, we can look at we can identify the performance of each location. So in location 1, we can see the trend in here. In location 3, we can also see the trend, and we can see the trend for location 4. Now, we can immediately know that location 4 is our worst performing location in comparison with location 3. Location 1 is our best performing location. Now, the issue with trend analysis is that it does not provide you with a benchmark to compare your data against. Now, this is an issue that can be resolved in a trend analysis. Now, for example, if I would like to know where the gaps were at the highest between location 4 and location 1, I can easily run a trend analysis and identify where the gaps are. However, a time series analysis does not indicate this for me. Now, to run the analysis, I've already prepared a sheet that contains all location 4 transactions, monthly transactions, and it also contains all location 1 monthly transactions. Now, to run the analysis, I have to select the trend field, which is the after-tax sum for location 4, the reference field, which is the location 1 gross, and I will include the audit unit field to be location 4 because this is what I would like to compare location 4 performance against location 1 performance. I will click on OK, and the tool will generate the trend analysis for me. You can see that in orange, we have the reference data, which is our benchmark. This is location 1 after tax sum. The data shown in blue, or the line shown in blue, is the location 4 performance, or the after tax sum for location 4. And I can immediately know that in December, the 2nd year, and January, the 2nd year, the gap between both locations was at its highest. Now, the final analysis we're going to conduct here is the correlation analysis. Our engagement client provides coupon sales, and we want to see if after-tax amount and coupon sales are in any way correlated. Now, technically, there should be a positive correlation between both. To run the correlation analysis, all I have to do is select the fields to include, which is the after-tax sum and coupon sales. I will include all locations and click on OK. You can see that there is a positive location correlation for all locations. And however, for location 4, it's weaker than location 3 and 1. Now, this is how easy it is to conduct these analyses if you're using a sound data analytics tool. Going back to our presentation, we get to the sampling section, and sampling involves selecting items from a population to be examined for the purpose of drawing conclusion about the population from which the sample was selected. Now, in sampling, we have non-statistical sampling, judgmental sampling, and statistical sampling. Now, Judgmental sampling is where the auditor uses his or her professional judgment to determine the sample size and selection. Now, the subjectivity aspect in judgmental sampling might be actually an advantage. If the auditor is experienced, he or she might be able to select and test only items he or she considers to be most important. Accordingly, no time is wasted on testing immaterial items. Judgmental sampling is also less expensive and time-consuming than statistical sampling. It also does not require special knowledge of statistics, or statistical software is not required. The disadvantages of judgmental sampling is that the sample results may not be mathematically supported. So it does not provide a quantitative measure of sampling risk. So sampling risk is the risk that a sample is not representative of the population. Most importantly, if the auditor is not proficient, the sample won't be effective. Statistical sampling, on the other hand, involves the use of techniques from which mathematically constructed conclusions regarding the population can be drawn. It provides a quantitative measure of sampling risk. It provides a quantitative expression of sample results. It helps the auditor to design an efficient sample. However, it's expensive and time-consuming. It requires special statistical knowledge and training, and it might require a statistical software. Now, the next poll question is, which sampling techniques do you commonly use? Now, most of you has chosen random sampling, and there's no correct answer to that. All of the sampling methods can be used depending on your objective and what is it you're testing. For example, attribute sampling would be used to test controls, and variable sampling would be used to conduct substantive tests. Now, these are the common techniques for audit sampling. You have attribute sampling, random sampling, systematic sampling, stratified sampling, discovery sampling, and variable sampling, and monetary sampling. Now, any data analytics software that you're likely to use should allow you to easily generate these or use these sampling techniques. Now, I'll show you how some of the sampling techniques we mentioned can be used by Caseware IDEA. But as I mentioned, any sound data analytics software will contain these sampling techniques. Now, we have random sampling. To generate a random sample, you only have to define the number of records you would like to include in your sample. For example, I can specify 10 records, click on OK, and it is as easy as that to generate a random sample by using a data analytics tool. We also have systematic samples. So to draw a systematic sample, you only have to specify the number of records you would like to include in your samples. For example, 20. I can click on OK, and IDEA will generate the sample for me. Now we can also use attribute sampling in IDEA. All you have to do is specify the population size, the tolerable deviation rate.
Sorry to interrupt. So I think that the share screen is off.
Is it? I'll stop sharing and share again.
Yeah.
Is it now on?
Yeah, now it's good.
So I'll generate all the samples again for you, and sorry about this. So to generate a random sample, you only have to specify the number of records you would like to include in your sample. For example, I would like to include 10 records. I will click on OK, and IDEA will generate the sample for me. And to generate a systematic sample, all I have to do is, again, just specify the number of records I would like to include in my systematic sample. And if I click on OK, then IDEA will generate the sample for me. Now, you can also use attribute sampling or variable sampling or any other sampling method that you would like to use. And to do that, you just have to click on attribute sampling. Define the population size. My population size is around 989 records. The tolerable deviation rate, let's specify this as 7. So I'll specify this as 7%. And expected deviation rate, let's include that as 5%. And confidence level will be set at 90%. If I click on compute, then IDEA will tell me that in order, I will need a sample of 239 or a sample size of 239. If I increase the tolerable deviation rate to 10% and click on compute, of course, the sample size will decrease because there is an inverse relationship between sample size and tolerable deviation rate. Now, let's assume you evaluated your sample, or you already conducted your test on the sample, and you would like to evaluate your sample. You again have to specify the population size, sample size, which is 77 in our case. Let's assume we identified 20 samples that had deviations. The desired confidence level was 90%. And if we click on compute, we will see that IDEA will provide us a conclusion about our population in general. So what IDEA is telling us here is that for an observed number of 20 deviation in the samples of a size of 77, you can be 90% confident that the population deviation rate is no more than 33.1%. Alternatively, you can be 90% confident that the population deviation rate is between 18% and 35%. Now, these are just examples of how easy it is to identify samples and evaluate samples by using a data analytical tool. Now, I finished my section for today. Thank you all for listening. My colleague Hisham will talk now about advancements in data analytics and artificial intelligence.
Thank you, Othman.
Thank you, Othman, for this presentation. Thank you all for attending. How are you? It's Hisham Liafi. I'll be going with you today on future advancement in audits. What are the technologies that are going to change our audits? And to start with, I would like to start with a poll on which of the following disruptive technology do you believe will have a major impact on audit activities? We know the world is changing, so which of these disruptive technologies can have an impact on audit? It's blockchain, advanced analytics, RPA, AI and machine learning, IoT, or cloud computing. Okay, so the answer came out different among all the answers. We have 67% of the people saying AI and machine learning, which happen to be part of our topics today. So that's will facilitate a little bit my subject. RPA comes with advanced analytics second and third, and then the remaining technologies are the least favorable. So to continue on, as also the results of the poll, we're all seeing that there is a change in the nation of analytics. Organizations are challenging the time to elevate their audit analytics capability and reaching to a maturity level where all their analytics are performed automated. There are scheduled tests that are done, and cognitive intelligence is adopted to drive greater efficiencies and effectiveness of operation. So we are witnessing nowadays a lot of changes in this technology. And I think most of our organizations currently have their audit or accounting team deploying some sort of data integration tools, advanced analytics, a little bit of advanced analytic, a little bit of scripts that are already developed to improve their overall quality of operations. And as soon as these organizations are advancing in their audit capabilities, their analytics capabilities, they start to reach to a level where it's not enough. They need more tests to be done. They need tests to be done on a larger scale. They need more coverage. And they start to get into automated scripts. And the more we have automated scripts, we have data gathered from the scripts, which we can feed it later to machines. And the machines will be cognitively intelligent to process these data, to process this information, and the predictabilities of the machines will become better and better over time. So let's go through each section of the automation spectrum and explain a little bit more of how it's happening and at which maturity level this analytics is. So it all starts with data integration, and data integration is the foundation of data analytics, where we just gather information from different sources. And as Zid mentioned yesterday, we can have them in the form of text file, we can have them in the form of Excel file, access, some of them can be in unstructured data like PDF files. We can link different systems such as the SAP, the Oracle through ODBC connection. So we have different files, we just need to gather them and to have them in a uniform approach to test, analyze the data, and reach to intelligent business insight. So at this level, we assume that the maturity of the internal audit team or the accounting team is at this level. They are able to gather information from multiple sources, either structured or unstructured information, into their analysis tool. They could have simple tools, they could have a little bit some general audit software. And they're also able to build some relationship between the different audit files using defined keys, and conduct simple analysis and simple quick tests, we call them, to evaluate and assess the effectiveness of their internal control, to have a little bit of a view of their internal environment. So let's have a small example. It's about bank transactions. And we are concerned whether there were any transaction that breaches the customer transaction limit. So it's a simple analysis. It will be done on a text file, which comes from a system. It's a bank transaction text file. As Zaid mentioned, the text file will be coming in two formats, either CSV file or TSV file. This is a CSV file. We can see that the delimited is a comma. And we have another file, which is the client master file. This file has a little bit more details on the customers, the transaction limit of each customer. And what we need to do is to build the relationship between these two files and identify whether there is any breach to the customer transaction limit. So I've imported this data to my analytics tool, and this is the bank transaction database. It has the transaction ID, the customer number, the type, the date, the approval, whether the transaction was approved. And again, let's remember our audit objective is to know whether there is a transaction for a customer that breaches his transaction limit and this transaction was not approved. So we have these those files together. And what we need to do is to build this relationship. We have a common key, which is the customer number between the two databases. We link these files and we create a file called bank transaction with details. This file will contain the details of the transactions, the name of the customer, and the transaction limit. Our next step would be in the analysis phase is to identify whether there are any differences. And when we talk about differences, we just need to apply a simple equation. The transaction limit, we subtract the absolute amount because there are positives and negatives depending on the action, either it's a deposit or a withdrawal, with the transaction limit, and we can see that some of the transactions are positive, the others are negative. So when a transaction is negative, that means it breaches the customer credit limit. So what we need to do is to filter out these transactions and add another criteria to filter out the transactions that were not approved. So I have a third database which has these results, and we can see these are the transactions, or those are the transactions that were not approved. So this is a simple analysis. At this maturity, we don't expect the audit team to be capable of doing advanced analytics, which comes to our next subject in the PowerPoint. So let me get to the PowerPoint, which is advanced analytics in visualization. And at this level, we expect the team, either the auditors or the accountant, are able to develop their own scripts and conduct data-driven analysis and data-driven audits. The reason for that, they will be able to deliver better coverage, better assurance that their areas are properly, or the risks are properly mitigated. And by leveraging on audit-driven analytics scripts and tests, the auditors or accountant will be able to quickly identify suspicious transactions, fraudulent activities, because they are not running data just on a sample or just sort of a small sample. Regardless of the type of sampling, we are covering the whole information before we go deeper in it. Regardless of the type, volume, or location of the data, tests can be conducted, because these scripts are driven based on the audit objectives that they have. And a lot of these risks can, or a lot of these scripts, they can deliver outcomes of analysis via intelligent dashboards that can be used later on to provide better insights to the audit clients. So as I mentioned, at this level, this maturity level, the audit team has already predefined macros and scripts that support them in conducting data-driven audits. So I'll be using an add-in tool. It's called Smart Analyzer. It has a set of financial tests. Some of them are related to general ledger. Some of them are related to accounts payable or accounts receivable. We have tests related to inventory. We have tests related to physical assets. I'll be running some tests on a general ledger file. It's a simple general ledger file. Let me just open the file. This is the general ledger file. It's a simple general ledger file. It has the details of the journal entry, a date, time of the transaction, the period, what is the source, the account number, account description, and so on. So this is a normal general ledger file that we can see on while conducting an audit, either on a finance department or while conducting external auditing, and even the finance deal with it. So what I need to do, and the role of the auditor or the accountant would just be to define the fields and to run the tests. And this is a sample of the tests that I have. I have tests related to general ledger, I have tests related to AR, inventory, fixed assets, and so on. So one of the tests related to general ledger is the out of balance journal entries. And you can see that for every test, there is the audit objective specified. This enables you, or enables the following auditor to just see what is the objective of the test, how we can do the test by having some examples. And this is part of the documentation that we usually need to have while doing advanced analytics, because it's not just about doing the analysis ourselves, it's about also handing over the documents and the data to other colleagues. So what I'll be doing is just I'll be selecting certain tests. There are 4 tests, and just be running these tests. You can see the system already has this scripts linked, and what it does is just runs these scripts accordingly, and the results will be reported. I have a sample of the report, and let me show you the report. We have completed the tests. And these are the results that came out in a dashboard, but you can also report them into a PDF report. So let me open the PDF report. And this is a sample of the PDF report. It's a customizable report for sure. And then it gives you an insight of what were the results from each test. So for example, we had the out of balance journal entries. It's a test that ensures that for each journal entry, the amounts are balanced. And the result identified that there are 9 records where the journal entries where the total did not equal to 0. The debit and the credit did not equal to 0. So that means that there is some problem here. I need to go identify them. I can just add them to my testing schedule, and I can identify more. I have other tests related to specific comments in the journal. Like all of these tests, we customize them based on what we need. So here I define certain words that I wanted the system to look for in the description of an entry. And my words were gift or reverse. These are kind of suspicious words. And we identified that there was one transaction for birthday gift. So again, it highlights suspicious activities, which I need to know to be able to reach to a prudent conclusion. And this is at this level, we're mainly able to do these tests. We're able even to visualize or use our results in have tools that provides insights on the data. So another tool that I'll be using is called the Discover. And it's quite similar to what Osman was explaining, which is the visualize. But the difference here, that this tool is encrypted to provide certain insights depending on the type of file. So I'm running the Discover on the general ledger file, and it quickly identified certain anomalies, which are certain GLs with 0 value, certain descriptions were blank, items were processed on an off day, on a Saturday. Again, these are important insights for me to have a view of, and then to continue my analysis later on. I'm not going to go deep in the analysis, and I'll be using the time more to explain the other features or the other activities in the automation spectrum. So the next level of automation is RPA, and RPA is a buzzword. And a lot of people were hearing RPA here, RPA there, and a lot of people think it's complicated, yet it's not. And by definition, RPA involves the use of a robot or a bot or a rule-based software to automate repetitive tasks. And the process of automating tasks is kind of not that hard. We need to have our script. We can use tools that we already have in our desktop, like the scheduling tools, the task scheduler, to automate these tasks. And internal audit have been reluctant, like internal audit teams, we're not progressive as internal auditors. We need to be adopting technology faster. And the use of RPA, for example, has a lot of benefits for the internal audit team. It can help them enhance and streamline their internal audit operation. And just a small sample of activities that can be automating using a bot or a robot includes scheduling control, continuous control monitoring through schedule control tests. So we can have certain tests that are scheduled on weekly basis, daily basis, monthly. The frequency depends on the frequency of the activity. And we can have these tests conducting to evaluate whether the controls are working as intended or not. We can also, and remember the process was that Zaid was explaining yesterday, that the data analyst or the auditor, the accountant, before he or she is able to do the analytics, they need to gather the data, prepare, cleanse the data, make sure it's clean. So this process is time consuming. So we can have a robot that does that for us, can gather the data, prepare, and cleanse the data for our analysis. We can also define certain indicators to monitor or to track. Either they are related to certain risks where they increase, I need as an auditor to go and be alert, or certain KPIs, I want to monitor them in my organization. So all of that can be done using RPA. And last but not least, we can even report the exceptions through a standardized exception reporting process. Either we have a breach in certain transaction or a customer credit limit that was breached. Again, we can monitor, write these thresholds, and then whenever there are breaches, the robot will identify them quickly. So I'll be giving you a practical example, and the practical example, I'll be developing a script. It's a normal script, and I'll be running the script. But let me first give you the case background. So the case background, there is a client who is a CFO of a construction company, and we all know construction companies, they have a lot of activities with suppliers, with contractors, with consultants, and the value of the payments are usually high. And the CFO has told you that, okay, there is a pattern of payment that does not correlate with previous years. We are witnessing an increase in the number of payments. And he has asked you as an accountant, an auditor, to perform a monthly analytical review on the accounts payable system and to test for any irregularities. And the objective of this review is to check the following: whether there were payments made that were made to unauthorized suppliers, invoices that were processed twice to the same supplier. We are concerned of duplicates, paying bills that were favoring certain suppliers. So my objective is kind of knowing whether there are irregularity, whether there are unusual payment, there is certain favoritism or concentration of dealing with same supplier. So these tests, we can run them once, and then after we run these tests, we can easily automate them, either through recording the macro, that the test that we have done, or through seeing the overview of the project and then recording, again, a macro, which can visually be seen. So before going into the test, the script, I need to know which information that I need, where can I find my information, and when do you need the information? When do I need this information? Because we're saying that these tests are conducted on a regular basis, on a monthly basis. So the information that I need are, first of all, I want from procurement the list of approved suppliers, which is regularly updated to include the new suppliers. And I want from finance the list of payment made to supplier. And the recurrence of these files, I want them on a monthly basis. I can have these requests issued to the finance, or I can just simply link my system to the procurement system or to finance system, or usually there would be an ERP system. And I'll be able to gather this information accordingly. So what I'll be doing is I'll be going into the system demo. I'm not going to be using IDEA now. I'll be just using, just a second, I'll be using the task scheduler. And what I'll be telling the task scheduler, I want you to run this test, which it's called an AP script. And what I just need to define is the trigger time. I can define the trigger time once a week, once on a daily basis or a monthly basis. I can define the time, or it's a one time only. So I'll be defining it as every day at 8. I want this test to be enabled. Okay, and what I just need to do is to run the script. I'm just running it now. Usually this schedule, we all have this test scheduler ability. And you can see I've developed in the script, I told the script that I want the results to be reported to be by email. Whenever this test is conducted, I want the results to be run by email. So this is the power of automation. A lot of tests are done in the background, you can see. And at the same time, I'm receiving an email in a minute or two that the tests were completed, the results are completed, and I can just simply go to check for the results. So the tests were completed. I've noted certain large movement between the suppliers. I noted some payment to unauthorized suppliers. I've noted, you can see this is the email that I received, that the accounts payable file, this is the results of it. You can just open it. This is the email. It just takes a little bit to scan the email. I can see that there are certain payments that were made outside the policy. It's either favoring the supplier by paying before the policy day, the required policy, which was 25 to 35 days, or certain payments that were made after the required dates, after 36 days, 59 days. Again, it might be they have a problem with certain suppliers. These are the results of my tests. I have other tests related to the fuzzy duplicate, which enable me to know whether there are certain payments, cash payments, multiple transactions that were processed in cash. Again, all of these tests were run automatically. It was not taking time, and they are scheduled. So what I'll be doing is just closing the file, and then I go back to my presentation. So Now we have reached to a level where the tests are scheduled, where the tests are automated. The script is ready and it's running the test on its own. What is the next level? The next level is to feed these scripts and feed these machines with the information, with more training data, so they can run on their own, identify the exceptions on their own, and then report them on their own. And here we reach to a level of maturity where machines are able to work on their own, which is the artificial intelligence and machine learning. And by definition, the artificial intelligence is just a branch of computer science concerned with automation of intelligence. And when we talk about intelligence, we talk about the ability to compute and to achieve goals in the world by machines. While machine learning is just a subset of artificial intelligence, it uses training data to make better predictions on the information. It can be supervised or unsupervised depending on the need of human interaction. So again, I'm not going to go in details about artificial intelligence. There are other sources that can provide additional information, but I'll show you a practical example on how there are some tools that can apply artificial intelligence. And again, I just want you to know that it's still in its primitive stage. We still don't know how much it can reach. We're still starting to adopt AI and machine learning and even deep learning and other cognitive intelligence tools in our audits or in our accounting procedure. So what I'll be doing is I'll be running an application called the Outlier. It's an application based on a Python script. And this application will just identify the outliers in certain fields. And if you recall yesterday's, or actually 2 days back, Zaid was explaining it's very important to identify the outliers in your data. Either the amounts that are overstated, very far overstated or understated, or the amounts that does not follow the norms by transaction. And I'll be running this outlier on the general ledger file. What I just need to do is to run the outlier test. I'll be defining the fields that I want to run the outlier. And here I'm going to check the account. I want to check whether there are any transactions on certain account that does not follow the pattern, by account number or by transactions in account number. So what I'll be doing is I'll be running this test. Just let me show it to you. Show you how the test is run on the background. The system is running these tests, is going through every file, is going through the GL information, is running some statistics to identify whether there are certain outliers identified. And once the results are completed, it will tell you, okay, we have different types of outliers. We have certain transactions that are upper limit exceptions. That means that these transactions that breaches certain limit that I have, and these reach to certain exceptions, I need to focus on them. They could be an overstatement or they could be just odd transactions. Other accounts are unicorn, which means that these accounts just appear once. And the categories of the outliers are ranked either 2 or 1. The category 2 means that it's more important for me, the auditor, to go to check these categories. Let's just go a little bit on some transactions and identify why they were considered outliers. So for example, this account, 11,000, I think 110, it has 133 transactions. The average value of transaction ranges between 5,600 and negative 600 debit and credit. So the average value is a credit of 61.97. And then there are 2 transactions that are outside the norm. These transactions, for example, are 15,000 and 12,000. You can see the details of these transactions. And the system, when it runs the analysis, again, this is a script that runs the analysis on its own, it identified that these ones are very far away from the upper limit of the transactions, of the normal distribution of the transaction. Other outliers can be defined, like, for example, let's go to this one, for example. It's considered an outlier because it just appeared once. This one, for example, just has 2 transactions. The value of one transaction is very high. You can see it's negative 61. So it's just telling you that this does not have any matching category. So you need to go and check why it's an outlier. And again, these tools, as I told you, we're still in the beginning stage of using AI, and these tools are developing by time. They are getting more and more refined results. I can do them on, as we have done them now, on combination of one or two fields, or I can do them on multiple fields. And every time I run these tests, different results will appear depending on the data. So the use of artificial intelligence and machine learning is just limitless. We still don't know how much it's gonna reach, but let's see, it's gonna be something interesting to see. Now I'd like to ask you a question after I just explained a little bit the different maturity level in the automation spectrum. And I want to know, at which level do you believe you are in as a company or as an internal audit function or accounting function? So I'll be running the poll. Okay, so the result of the poll are quite interesting. Most of the organizations are still between the data integrations and the advanced analytics. We just have 2% of the people are in the RPA and 9% or 11% are in the AI and ML level. So that's an interesting thing. Let's see how the future and what the future keeps for us, but I believe that this technology is going to take us somewhere different. And the benefits of this technology are just limitless. And let me just name a few. So automation by itself will allow the audit team to focus more on managing the exceptions or the exception results that were reported from the machines or the automated tests, rather than doing the test themselves, rather than doing the process from gathering, preparing, and after that, reporting. All of this will be automated. The focus will be more on creating interpersonal relationship with the clients, on spending more time on improving the efficiencies of the operations. Also, by reducing the time-consuming tasks, automation can deliver significant cost saving for the audit function, either by using RPA or AI, ML. All that will enable the audit team to expand their audit coverage, and by that, get into deeper insight, get into deeper levels, and improve the overall audit quality. Also, by having that, or by saying that, the audit, the findings will be timely noted, and then will not be a reactive function. We're going to be a proactive function. Either the audit or the finance or whoever is going through automation, the finding will be noted directly. We don't need to wait a month or two or wait for the audit annual visit to identify these findings. And last but not least, by reaching to that level, by talking at the same level of the department, by showing the other functions that we are proactive, that we are actually there, we are identifying the problems as soon as they happen, we add greater values to the operations. And by that, I conclude the presentation. Please, if you have any questions, add them to your chat. Thank you.
Thank you very much, Hisham. Okay, so as you can see from this presentation, data analytics is really going to be a journey it will start with basics, and then you keep adding on with your expertise and the team's expertise. You can keep adding on, and the tools, for example, like IDEA, is supposed to help you and support you in your development until you reach to robotics and artificial intelligence, and the system, having a life of its own to continuously do the audits for you. So please let me know if you have any questions, and we shall be pleased to answer them. Yusuf, do we have any questions? The question is raised by Mr. Al-Mu'tasim Isa, and his question is there best practices for RPA? Now, I think my understanding of the question is, are there like guidance or standards like the ISO standards for RPA? And the answer is none that I know of, and I'll ask my colleagues if they know of anything that is out there.
I can just add a small answer
to data. Please.
So when it comes to RPA, when it comes to development, we take this as a baby step approach. We just learn and expand our capabilities. We expand the team capabilities until we reach to the maturity levels. The scripts are developed. We have champions who are responsible for these scripts, responsible for scheduling these scripts. And then we start linking different technologies together to have our full cycle automated. I hope I answered a little bit of the question. There is no standard, but we need to take it a step-by-step approach.
Can you share some examples? The second question is, can you share some examples of automation and robotics related to IT processes? And that is a good question. Actually, most of us as consultants in this presentation have a background of audit, accounting, and finance. However, yes, it does have a lot of application in IT related aspects. For example, you can run robotics to continue using data analytics software to continuously check your log files for you and come up with trends and notify you. You can also do correlations between your failure login attempts and the actual incidents that happen in the organization. So these are just examples of the various analytics that you can conduct on the, you can check your access rights. If there is anything that does not make sense, automatically the system will notify you through robotics. So yes, there are many applications in the IT world. Mr. Muhammad Imran is asking, automation may be quite expensive. Can the probable benefits outweigh costs of automation, especially with a view to short-term life and redundancy of systems? Now, when we're talking about data analytics automation, it is not that expensive if you take the route that we are suggesting, which is a step-by-step approach in which you build capacity and knowledge in the team, and they themselves start building the automation processes. For example, in IDEA, as Hisham has mentioned, you can schedule certain tests on certain times for it to conduct them for you. So that's part of the automation process. Later on, you can connect IDEA to other tools, and where it will allow it to have a workflow for automation and test results being shared and so on. So, definitely the benefit will outweigh the cost of automation. If you look at the cost of automation, and today, for example, we're talking to the Central Bank of Saudi about robotics using data analytics, and the cost is nothing compared to the benefits to be derived. Not only for the Central Bank of Saudi, I'm just giving you an example of any kind of organization that has large data transactions being processed on a daily basis, the cost will definitely be less than the benefits to be derived. Question from Ms. Lubna Saade. Is the IT is the idea applying a statistical sampling method as well? The answer is yes. Gentlemen, anybody who wants to add in? Uthman, please go ahead.
Well, I conducted an attribute analysis, and you can conduct monetary and variables samples, but we didn't have enough time to share all the statistical samples. But yeah, it does. It contains all sampling techniques that were shared in the presentation.
Mr. Malik has sent a note thanking us for the presentation. You're most welcome. Kindly inform us what's the best tools and advices to develop our companies regarding data analytics and how it can increase its objectives through caseware application, for example. Thank you so much. Now, caseware idea, as you can see, is a very user-friendly tool and a powerful tool as well that has developed a lot since its inception. It was developed by auditors. So the institute or the CPA association in Canada was the one to develop it. But going forward, they kept developing the tool and adding to it. So it's for audit purposes, it's a very powerful tool. I cannot say, it depends on your objectives. So what your objectives are. So for example, if you're just doing simple data analytics on small databases, you can just use Excel. The more complex your database is, the larger the volume of transactions, you need a tool like IDEA that is powerful enough to support you in your journey, as I would say it. Question from Mr. Muhammad Mustafa. Thank you for the valuable information. What is the impact of using an automation system on the reduction of internal audit manpower? You're most welcome, Mr. Muhammad. That's a very good question. Now, from our experience, and we have helped a lot of organizations implement data analytics tools, the numbers in terms of manpower were not reduced. I'll tell you exactly what happens. When the organization starts seeing the value added coming from the audit, they never talk about reducing the audit budgets or resources. However, auditors, as Hisham mentioned in his presentation, concentrate on higher risky areas, and a lot of the work they do is automated using the tool, so they have more time to spend on more valuable input to the organization. So it has never resulted in reduction to internal audit manpower. However, it has resulted in uplifting the internal audit image in the organization. And accordingly, the manpower and the budgets were not reduced by management or by the board. Mr. Usman Yaqub has asked a question. I wanted to know what added skills and certifications an internal auditor need to have to meet future demands of internal audit activity. That's a very interesting question. Let me share with you a story. I actually attended one of the conferences in Canada, I think it was 3 years ago, before COVID started. And the president of Caseware was talking about the future of data analytics and the tools that you are seeing today. And in the future, and I'm talking here external audit, the data, the accounting data from different accounting systems like QuickBooks, SAP, whatever the accounting system is, will be imported into the data analytics tool, and the system will run all the tasks needed and will tell the auditor which transactions to select, because the system will tell the auditor these are the highest of risks transactions, the red flags that you need to concentrate on. The system will also produce the financial statements and ready for the signature of the partner. That is where they are going. So that's for the external audit profession. Now, for the internal audit profession, so the reason I shared this story is because the external auditor's skill set today is not the same as the skill set they are required to have 2 years down the road. They will need to understand data analytics, analyze the results of the data coming out of the system, and need to understand how these things work, the robotics and the artificial intelligence and so on. With regards to internal audit, there are certifications that the internal auditor can take. For example, the CEDA certification, but it has to do with IDEA. Other certifications are available in the market relating to data analytics. Even there are master programs now that you can take in data analytics. I believe internal audit is moving quickly towards automation and data analytics being part of it. And my personal expectation is that there will be future demands for that area of the industry. Mr. Ahmed Shaheen is asking a question: do it cover all tests as reviews or SPSS, like using lag data, or we can estimate future trend to manage the variances between these estimate trends and actual data? So as the trend analysis that Uthman showed, it does calculate the trend and can predict the future accordingly and calculate the variances between the actual results and the estimated results. Uthman, do you want to comment on this?
Yeah, absolutely. I can include the forecast in my results. However, I did not have enough data points in the data I was presenting, so I did not forecast it because the results will have a high error. But you can include forecasts and you can specify the forecast period in which you would like to generate the data for. So it does include the forecast.
And having included the forecast, you can always compare the actual results against the forecast
Absolutely.
And calculate the variances. Any other questions, gentlemen, ladies? Okay. So next session will be about fraud, using data analytics to detect fraud. And that is definitely an interesting topic. I asked the team to give some examples, using cleansed data of fraud scenarios that can easily be detected using data analytics tools. They will be also covering the Benford law and using data analytics tools and so on. So basically, it's going to be an interesting session. Towards the end, we're going to talk about what you can do to implement data analytics or introduce it in your organization. So again, I want to thank you all for taking the time to attend today. It's always a pleasure to be with a team of professionals and to share ideas with them and listen to their inquiries and reply back to them. I want to thank our presenters, and I want to thank our partners, ISACA Jordan, IMA Jordan, and the Institute of Internal Auditors, IIA Jordan as well. It wouldn't have happened without them, and thanks for all their contribution and efforts in making this happen. With that, I conclude our session for today, and I thank you all very much for your time, and I look forward to seeing you on Wednesday, inshallah. Have a great evening. Assalamu alaikum.
Thank you all.